good friend talked to me a couple of days ago, and we were talking about like how we find opportunity. And he said, when somebody's drilling for oil, they might like just dig a vein straight down and not get anything and do that forever. But if you go 2 feet over, you might find kingdom. And that's kind of what it looks like when you're a loan officer and you're trying to find opportunities out there. So as a loan officer, I kind of think kingdom is going to be felt if you really start to look at non-QM. It is going to be the biggest growing portion of the mortgage market. Now, we say that all the time, but I want you to think back to like 2002, 3, and 4, when non-QM was doing the same thing. They were serving underserved communities. The strange thing is about 2002, 3, and 4 is their default rate, it turns out we're about the same as Fannie, Freddie, and Ginnie. So listen to me, and we're not non-QM because we do have the ability to repay, and we are not as irresponsible as we were before. What we're doing right now with our non-QM lenders is we're trying to find solutions to problems where they simply need solutions for. So as a loan officer, seriously, all of you, if you have a problem on the file, the same thing always comes up. It's when you're qualifying that borrower. I mean, our market is so unbelievably overvalued today that nobody could buy a house. I hear this every day. Can we go any further in my case? So when I underwrite a loan, I'll write it to, say, in California, to 550. And when I give that pre-qual or pre-approval letter at 550, I'm already pushing the boundaries, and I get contracts inexplicably for 585. And then, of course, when rates go up, you are expected to make that deal work. And then you have to say the dreaded word to your realtor partners out there, no. So then at some point you think to yourself, I'll just qualify lower, and then I'll build in that, didn't you hear from me on the qualifying amount? Phone call or email, and then you do phone call, and then you do that, and then once again you're asked the same question from your realtor partner, why can't we go higher? Now, the reason we're having more of these phone calls as LOs, now more so than ever, is because of the whole issue of affordability in any place in this country. Now, I showed you this graph before of what you make versus what you need to make in order to buy a home. And as I told you then, as I'll tell you now, the numbers simply don't align. You make about $85,000, you need to make well over $100,000. So it stands to reason that we are having more of these calls as LOs today than we've ever had before. It's always been an issue of granite is always better than Formica. Hardwood is always better than laminates. We all want the Porsche, we don't want the VW, even though they're made in the same company. We all want the Acura, we don't want the Honda. And nice things are, I don't know, I mean, they're just better. The problem is really this. With inflation and prices right now, we just don't have the money. And a Honda is a pretty damn good car. Reality is this, a 2-ton hammer, and sometimes it comes crashing down on your clients. So here's the point. Sometimes you look at these scenarios, and you're right.
You're gonna need a bigger boat.
You have clients that sometimes, they can't afford hardwood floors, the granite, the Porsche, but Fannie, Freddie, Ginnie, well, they're kind of getting in the way with their underwriting guidelines. Now, why are they doing that? Well, one, they don't want to see a repeat of 2008, but more so is we have to stand by guidelines, and they don't like the income that you absolutely have to use, even if you sometimes have income outside of what you're using. So here's the question. What if somebody has a side hustle? What if, a teacher uses their entire summer as camp counseling? What if a fire person has their 3 days off with a pool business? What if your client works for the same company but does 2 jobs and their income on said second job isn't what Fannie, Freddie, or Ginnie require on their guidelines? Now, if you don't know non-QM, then you as a LO and a realtor team out there, you guys are done. But man, are you guys missing the biggest opportunity right now. But if you do understand non-QM like my friends over at Oaktree, then you're open for business. Now, see this real quickly. Back in from 01 to 2008, those subprime loans were offering solutions where none existed, and that's why the entire industry went up. Not as much as what we're doing right now, but certainly didn't go up. Now, the great thing about the new non-QM market is they're offering solutions where none existed, just like the subprime market, but they're following the spirit of the Dodd-Frank Act. They need to show that you have an actual ability to repay. They need to show that they are not going to run you in the ground once you get this mortgage. Now, if you remember those subprime days and then you compare them to today's non-QM days, then we've got a whole bunch of great solutions in front of us. And again, my friends at Oaktree will open the door to more transactions for you and your realtor partners. We know the difference between the Wolf of Wall Street days and where we're at right now. Imagine a world with responsible lending where your income doesn't fall under the Dodd-Frank Act or the GFE 2010 Act. Imagine a world where you can charge 1 for the $1 million or 2 points for the under $2 million. Imagine a world where traditional underwriting actually reads the file and they don't just simply look at the findings. You have somebody who knows how to underwrite a file. And that is exactly what my friends over at Oaktree do. And then, my God, this is the biggest one. Think of all the self-employment people out there right now. And then and only then are you going to realize that you have your salvation and an answer to a whole bunch of files right now that you simply are declining. But guys, you have to focus on non-QM. Now, if you don't have a direction or you don't know what the next step is to take, you don't have to have these talking points. You don't need to know the products right now. And you don't even have to have the approach. You have to have the capacity and the desire to go realize this portion of your business, because all you have to do is call my friends at Oaktree right now, and they will put an account rep on the phone with you, and they will make you fluent in guidelines and products and marketing. Listen, I'm telling you right now, Oaktree has your back. They got this one. This is what they do. This is all they do. They're not your Fannie, Freddie, Jenny. They're not your Fannie, Freddie, Jenny lender who's going out there and trying to do A-paper stuff and non-QM on the side. No, all they do is non-QM, and they have you covered. They've got this thing, as I said. And all you have to do is call these guys, email them, text them. All the links are down below. They're going to set you up. Now, if you're a realtor, all you have to do is call us up. All of our links are up above. We have unimaginable solutions to the problems that you're facing with your clients right now. And I'll tell you this right now, half our files we close are ones that other lenders won't close, and it's because of my partners over at Oaktree. They can fix this stuff. So if you're a lender, just give them a buzz, text them, or if you're a realtor, call us. So let's not say kill this market. This market is our new reality. And I'm telling you guys right now, we have solutions in front of us, but it is incumbent upon us as loan officers and realtors to make this happen. I hope to hear from some of you soon. And if you're a loan officer out there right now, call these guys up. They will fix some of your problems. Hope this helps, and we'll catch you on Tuesday. Cheers.